Hey everyone, we're going to get started on this buyer education session. So we're going to have a few of our agents here come online and go through the different categories, I guess you would say, in real estate and everything that's going on, the process in real estate, the escrow process, how contingencies work, how getting approved works, how shopping for homes works, what the market is doing right now. So I'm going to start off just kind of talking about the market in general. And just give you a few stats of what's going on there. So the market is heating up right now, even before the summer and spring season. The summer and spring season is usually when you have the most activity, the most traffic, the most demand, but it's already heating up as if it was the summer and spring season. So a few things that I want to go over are just going to be some of the stats that are happening now in the real estate market. And I'm just going to pull up some information here on the market stats. So first of all, the demand of active homes being sold is up 7% in the last 30 days, which is a great start to the spring season. Also, the inventory, I know everyone has been seeing in the news, inventory is super low right now for a single family home. Detached house, you're seeing a 42% decrease in active inventory. And with condos, you're seeing even a bigger decrease in inventory, which is 51%. So it seems like there's a lot more people buying condos now, a lot of first-time buyers that have been looking for a home and have not quite found a home. A lot of people are going into the condos just to get their feet wet, just to get into the market. And also at this time last year, when we're comparing the inventory of homes in general, we're at about a half month's worth of inventory. So a half month's worth of inventory basically means that there is double the amount of homes being sold every month versus how many homes are actually available that are new every month. So inventory is extremely low. It's really tough to get even lower from where we're at now. Another thing that's a really amazing stat, I know a lot of people, when they're out looking for homes, people are overbidding, people are getting into bidding wars. So buyers are paying on average 105% over list price. So this means buyers are paying about 5% over list price. The list price doesn't mean that's how much the house is worth. Sometimes the homes could be underpriced, overpriced, or priced exactly where they should be. But just in general speaking, buyers are paying 5% over list price. Another market stat that's pretty impressive here is even though buyers are paying 5% over list price, single family homes have increased 18% over the year. So what that means is in a matter of a few months, you could get back that 5% that you paid over list price. So that's another thing to keep in mind when you're out looking at homes and you feel like, hey, I don't want to pay more. I don't want to pay 5% more. Well, that 5% more that you might pay in that moment, in a matter of 3 to 4 months, you might get that right back. And then from there, your home is just going to continue to appreciate. So single family homes, they have appreciated the median home price year over year, 18%. Condos are at 21%. So condos have actually been going up in value quicker than homes have. Obviously, homes are going to be priced higher just in general, but you are seeing condos starting to catch up, starting to go up in value quickly year over year. And this year over year stat compares February compared to last year in February. So at this time, it's about 21% for condos. Another stat too, 18 days average market time. So this means that homes are staying on the market on average 18 days. Of course, in some cases, you're having homes that are staying on the market for 7 days or 10 days. Maybe other neighborhoods, other zip codes might be staying on the market 21 days, 25 days, but the average is about 18 days. So this is just a quick rundown for the market stats here in San Diego. And my next agent up that's gonna present the next category is gonna be Karen, and she's gonna be going into the pre-approval and mortgage process. So let's welcome Karen into here.
Hi guys. So I'm going to be talking to you guys about pre-approval and mortgages. And let me pull up the screen real quick. Okay, so with pre-approval and mortgages, there's a difference between pre-approval and getting pre-qualified. Pre-qualified is when you fill out a little questionnaire online. It'll give you a general idea of what you're qualified for. With pre-approval, that's going to be more of what you're actually qualified for. And during that process, when you're working with a lender, there's a couple things that they're going to need. They're going to need to have your W-2s, the last 2 months of your bank statements, the last 2 years of your tax filing. They're going to take a look at your credit history, as well as you'll need to provide current government issued IDs. And if you're using a VA loan, you're going to have to provide the statement of service. Next, we're going to discuss a few different types of loans. The first one, in San Diego, there's a lot of active duty or past military personnel, and we have the VA loan. So that's a great loan. It has great rates, no money down, and there's no PMI. We'll discuss PMI shortly, but also to keep in mind with the VA that there is a 2.3 VA funding fee off the purchase price. Next is conventional loans. With that, you'll need a minimum credit score of 620. And your debt to income ratio is 50%, and you'll need a 3% down on a conventional loan. Next up, we have the FHA. That you can go in with a lower credit score. 580 is the lowest, and you'll have a higher debt income ratio and a minimum of 5 or 3.5% down. Next, we have the hybrid loans. Not all lenders will work with the hybrid loans. So we do have some great lenders if you would like or interested knowing more about the hybrid loans, but it's a great option for people to use only 10% down, and you're saving that 1 to 2% on your interest rate, since interest rates are increasing over the course of time right now this year. And then we also have bank statement loans, and those are great for self-employed 1099 employees, and they'll have a slightly higher interest rates with a minimum of 10% down. And of course, your lender will go over what type of loan will best suit your needs and other things to remember. So in addition to your down payment, you're going to have closing costs. Closing costs are about 2.5% of your total purchase price. And with the closing costs, that's going to include title and escrow fees, prorated property taxes, HOA payments, and document signing fees. Now, the last thing that we're going to discuss is the PMI. That's the premium mortgage insurance. So if you're going to put less than 20% down, that you're going to need to pay that premium mortgage insurance. Again, your lender will be going over all of that information for you. And the cost of mortgage insurance has decreased in the past years, which helps get our payments lower. Next up is Desiree to start talking to you about shopping on the market once you're pre-approved.
Thanks, Karen. Hey, everyone. So once you get that out of the way and you've done your pre-approval with your mortgage lender and you've worked with your agent to connect with that trusted professional, there's a few things that you're going to want to do to prepare for getting out into the market and actually going to look at homes. You're going to want to determine your wants and needs. Those things are going to be very different, and I would keep your list of wants and needs to maximum 5, knowing that when you're shopping for your perfect home in a market this competitive, you're going to be very lucky to get 3 out of 5 of those needs. What's really truly non-negotiable for you, and what are things that you might be a little bit more flexible on? That flexibility is going to be extremely important while you're shopping for a home. Not only, like Javier mentioned, are we extremely low in inventory on this market, but we are in a very competitive market. So having flexibility to find different homes in maybe slightly different areas is going to be very important. Of course, working with your agent to create your search criteria is going to be extremely beneficial to you, because your agent knows San Diego and its surrounding areas so well that if you have the wants and needs for certain neighborhoods and you have a very stringent search search area, then your agent may be able to provide you with some different options of different areas, different types of homes that are going to benefit you and your family while also staying within your price range and keeping those monthly payments right where you want them to be. When your agent and you get together to create that search criteria, they're going to put together what's called a Compass collection. Compass is our brokerage, and it does have amazing tools for our clients to utilize as the consumer, and it helps the agent and the consumer work very well together. So you will put the Compass collection together. With that, we also have access to private exclusive properties that are only listed for our brokerage. So Compass agents only. Those are a really good way to get in to certain properties prior to them hitting the open market and being listed on sites like Zillow, Realtor.com, and Redfin. We also have access to coming soon properties, and that's very beneficial as well because it gives you insight on what's to come in the next week to 2-3 weeks, and gives you something to look forward to if maybe the right home isn't necessarily coming on the market at that time. Karen talked a lot about the pre-approval process, and your lender might give you a maximum search number. Where you should be searching for condos and townhomes is going to be different than what you should be searching for single family homes because you have to account for the HOA fees. So that'll change things up a little bit, but regardless of what you're shopping for, it's very important to remember to not ever shop at your maximum budget. Your agent and your lender will give you better criteria and search capabilities of where you should be searching, probably somewhere between $25,000 to $75,000 below that maximum approval amount. That way you have lots of room for negotiations. It's also important to remember that with the coaching of your realtor, you may put multiple offers in on multiple properties. So you have to follow the guidance of your realtor when it comes to that, but don't put all your eggs in one basket in such a competitive market. Once you've found the home that you love and want to call your very own, then you are going to move into writing an offer. Today we have Erica here to talk more about writing the perfect offer and how to get it accepted.
Hi, everyone. I'm going to talk to you about writing your offer and what you'll need when you do write it. So a couple things that you're going to need when you write the offer is your pre-approval letter that Karen discussed, your proof of funds, so showing that you have that down payment and those closing costs available to finish the transaction, and then the residential purchase agreement, which we also call RPA, and that is going to be prepared by your real estate advisor. So if with this market, you may have to put multiple offers, or you will. So you'll get pretty familiar with it. And then we can also email you a blank copy if you need one. Once we write up that offer for you, we will determine the price and the terms based on the sales comps and the property competitiveness by using our systems of communication with the listing agent and seller of the property to match their needs with your ability to create the best offer possible. And we have 5 tips for making your best offer. So know your budget. Your max EMD is going to be the deposit that you put within the first 3 days upon offer acceptance. So knowing what your max amount to put down is really crucial, just because escrow will be holding on to that until you get to the closing table. Your purchase price, you want to make sure that you're not maxing out your budget, your monthly or your pre-approval amount. Your appraisal coverage, there may be an instant where the house might appraise a little bit lower. If you have extra cash on top of your down payment and your closing costs, you can always use that extra money to cover that appraisal gap if it comes in low. And then of course your closing costs. A lot of people are aware that you have a down payment, but they are unaware that you also have closing costs, which is usually 2 to 3% of the purchase price. So you'll have an idea, and your realtor will be able to let you know what that amount approximately is going to be. Another tip is be ready to move fast. Most of the time you'll see the homes being listed on Thursday, and then they go Thursday or Friday, and then they go pending on Monday or Tuesday. So you want to make sure that you are viewing the property or having your realtor go out and view the property as soon as possible, just so you can know whether to put that offer in ASAP. Your third one is to lean on your real estate professional. I do know that a lot of people have different crazy hours for work, and if you're not able to make it to a showing or an open house, we'll definitely be there for you to help you do a virtual showing, or if you are available, they will be there with you, walking around, looking at the property with you, and just pointing out anything that might raise some red flags. Number 4 is to make a strong but fair offer. Obviously, with the market, you see a lot of outbidding. We will definitely never put you in a position where you're overpaying for a home, or at least we will try not to. But we will definitely check the comps around the neighborhood to make sure that it's a fair offer, but strong enough to get accepted. And then number 5, you want to be a flexible negotiator. So whenever you get into the escrow process, you can renegotiate things, but just remember not to be too much of a stickler, just be flexible. So that way you can get your home at the end of that process, especially with the repair request. You want to make sure that it's safety related if it's something that you really need to get done. So next we have Miss Maria, and she's going to talk about the escrow process and give you a little insight on that.
Hi, everybody. Welcome to this informative session. I am Maria Corbisiero, and congratulations, you have an offer accepted. How exciting. This is cause for celebration, but this is also time to get to work. So one of the first things that you're going to receive is a congratulatory call from your agent, and then you will receive an email from our transaction coordinator, who is going to really help navigate the process with documents. They are going to be a resource for you, and they will also help you communicate with the escrow team. The escrow team is going to be a third-party team who is going to work between the sellers and the buyers. They are going to send you an email requesting that you wire your EMD, also known as your initial deposit. This is traditionally 1 to 3% of the purchase price that you have offered. We try to keep it around 3% when possible, because that does show a stronger offer. But if it's not something that's manageable, 1 to 3% is absolutely fine. That 3%, or the initial deposit, excuse me, is going to be put into the escrow account. You will wire that money. I always suggest that you call and confirm with the escrow team that they did in fact send that email to you and that those were their instructions. Once that money is put into the escrow account, you have technically 3 days to get that money transferred. We always encourage our buyers, especially in a competitive market, to get that in within the first 24 to 48 hours. Next, we are going to head into communicating with the lender. We will email them and suggest that they get in contact with the escrow team as well, and make sure that we have all of the documents collected that they need to start processing the loan, going into the underwriting process and making sure that we are full steam ahead. The lender is also going to help us shop for homeowners insurance, so we can help you with that process. But then the next really key items that we're going to tackle are going to be our inspection contingencies, the appraisal contingency, and the loan contingency. First, we have the inspection contingency process, which is traditionally anywhere from 5 to 17 days. In a competitive market, when we're moving very quickly, we're going to keep that a little bit shorter to show good faith and eagerness to the seller. The inspection contingency is going to involve us reviewing HOA documents, seller disclosures, termite inspection, the TDS, and then also hiring a licensed and professional home inspection company to come to the home and basically dissect the property, going through everything with a fine-tooth comb, making sure that we really know what type of property that you're buying and anything that we see is an issue. So there are going to be a few different levels of items that the home inspector is going to point out to you. They will involve items that are just, maybe outdated or need a little bit of repair and love, or they're going to be health and safety concerns. If it's something that falls into the health and safety category, we may ask the sellers to repair those by a licensed professional. If there are other items that are big ticket items that we were unaware of but did come up in the process, we will go back to the sellers with a request for repair or requesting credit for the repairs. If we do the credit for repairs, you'll essentially get money back and you will have to take care of those repairs yourself, however you see fit. And if you are asking for a request for repair, we'll ask that they be done by a licensed professional and we will have proof of that with a receipt. Once we are settled with that, we are going to remove that first contingency. The contingency, as we had mentioned earlier, the 3 that we have in place protect that EMD, the initial deposit. So that first layer is taken off. We will sign away on that, removing that contingency, and your agent will make sure that you are really informed of what is the next step in that, and that we are potentially putting up that EMD up for grabs should we decide to cancel once all of our contingencies have been removed. But we still have 2 in place at this point, which are going to be the appraisal contingency and the loan. The appraisal contingency is really going to be done by the lender. They are going to order the appraisal. An appraiser is going to come in to the home and give an objective summary of the home and the property value by pulling comps and seeing the upgrades and updates, the neighborhood, et cetera, seeing what the market conditions are. And a lender cannot typically lend more money than the appraised value. So in the event that the value of the home does not appraise at value, we will have to go and negotiate, or you will have to discuss and plan something with your agent that you have an appraisal gap coverage. Again, if the home that you are buying is valued at $500,000 and you offered $520,000 and the appraiser said it was $500,000, there's a $20 or $20,000 discrepancy. We're going to have to either negotiate that or come up with the cash to cover the gap, because your lender can only cover up to $500,000. The final item is going to be our loan contingency, and that again is going to be with the lender. So any outstanding items that you may have that they need to finalize and validate, we will get those items into them, and your loan is going to get clear to close and fund. That's exciting news, and all 3 contingencies will be removed. Should you decide to cancel after all 3 contingencies have been removed, your money is at risk. Should you decide to cancel the earnest money, the EMD, the initial deposit. So we want to be really careful through this process and mindful, and then making sure that we're all on the same page with each one of those contingency removals. So a few things to keep in mind as we go through this. Let me scroll down. When you are applying for your mortgage and you're going through this home buying process, go ahead and click that. Yep, thank you. Please make sure that we don't do a few things. This is a really sensitive time for your credit. Please do not change your bank accounts. Do not make any large purchases, even actually small purchases by opening up a new cell phone account or what have you. Do not deposit large amounts of cash. Don't apply for new credit cards, and don't co-sign on any other items for friends or family, as much as you may love and want to help them. So I hope this has been helpful for you, and we're here to answer any questions. Please feel free to put your questions in the chat, and we will get to them after Anya talks about
closing. Wonderful. Well, for those who can't see me, I'm working remote, and that actually shows how technically inclined we are. We are the team with all resources, and I would like to talk about closing. Now you've gone through so much, and the finish line is so close. So congratulations. This is the best part of it, besides getting the keys in your hands. So at closing, now it seems like ages ago. However, it was only 14 to 25 days from start to finish. Very quick, as you can see in this market. So once everything has been cleared to close, you do get closing documents you sign electronically. These are closing disclosures. In these closing disclosures, you basically will see the title documents. The title company is working in your favor and obviously also for your bank in regards to showing that the title is clear, that there are no existing liens on it, and that you will not be getting haunted by other debtors once you purchase the home. You will also get the selecting of a home insurance plan. Most lenders require this. So at this point, you should have a home insurance plan that you're going to bring to closing. As required by law, your lender will send you the closing disclosures about 3 days prior to closing day. That's very important for you. You're so close to the finish line, but do not exit just yet, because these documents and disclosures are very important. You will basically get the loan terms, the loan amount, the interest rate. Make sure this reflects what you're expecting and what you discussed with your lender. You will also get the information about the closing costs that you have to bring to closing day. So you need to make the arrangements to get the certified checks or wire it. And you will also have to review all the loan disclosures. You will also get the seller's disclosures. The seller's disclosures are disclosures that show you where the seller has to disclose certain items that you may have not seen in your final walkthrough. And it is very important that you review all these information in order to know that this is what you agreed to and that you are purchasing probably one of your most important purchases in your life. So therefore, we want to make sure you're informed about all aspects of it. Once on the closing costs and the earnest money are determined, or you have the earnest money obviously paid within 3 days of accepting the offer, your lender will fund your loan and funds will be dispersed by escrow. That basically is almost the finish line. Now the seller will receive your funds, and the deal is officially closed once the deed has been successfully recorded with the County of San Diego. This is also something that you need to keep in mind, that you are not a homeowner once the funds were dispersed or received. You are the homeowner when it is recorded by the County of San Diego. Therefore, if the funds are dispersed and received on a Friday afternoon but not recorded, do not expect that you get the keys on Friday afternoon and then have the moving company be ordered to bring all your items to your new home. As exciting as it is, you may not get the keys until Monday, until the deed is recorded with the county, and therefore moving has to postpone to that time. We did have some people that did preliminary order these moving vans and then had to postpone it. The same applies to dry closing, meaning if everything is dispersed and everything is agreed, but it has not been recorded, then you're not the homeowner just yet, but the finish line is there. Once everything is recorded with the County of San Diego, you can certainly celebrate. We want to congratulate everyone who's taking this very important step to become homeowners, and it is a wonderful reason to celebrate this milestone in your life. And we wish everyone all the best and are here for any questions you may have.
Amazing, Anya. Thank you so much for talking about closing and getting to the best part of the whole process, getting those keys. So before we get to answering all of your questions, I'm just going to talk about the key takeaways that we talked about along your home buying journey. When it comes to buying a home, here are the key milestones in the process, just to recap for you. So it's very important to build your home buying team by finding a trusted realtor that can guide you along in the process and be your trusted real estate advisor and your professional negotiator along the way. They also end up being very close friends with you because you get very close in such an emotional experience with your largest purchase of your life up until this point. Next, checking your credit score, making sure you're in a good position to be purchasing a home. Again, this is something that the lender will do for you, but it's always good to monitor that while you are preparing for the home buying journey by using an app that I like to use, Experian, but people like to use Credit Karma and other apps like that. Your bank also will have capability to help you monitor that credit score. Boost your savings. I know sometimes we live in one of the funnest places in all of the world, San Diego, and it's hard to save because we like to go out and enjoy the fun things in life. But it's very important to have a good savings plan set up for purchasing a home, and get on an automatic savings plan. Just make sure you're putting away a good chunk of money every single month. It will pay off once you can start building your wealth and you get the keys to your home. Knowing your numbers, again, this is something that your lender and your realtor are going to help you accomplish. By knowing your credit score, you're going to be able to discover what you can afford based on the current interest rates, your income, your debts, and a few other puzzle pieces that will help put together for you so that we can determine your buying power. Next, like we talked about, going house hunting, that's the fun stuff. So getting out into the open market and checking out all of the options that San Diego has to offer. Making an offer, like Erica discussed with us earlier, make sure to always defer to your agent. They're going to help guide you through that process for the most smooth and successful offer. Next, as Maria spoke about, we're going to get the inspection and the appraisal. This is a very important part of knocking down those contingencies as you go so that you can get the clear to close and eventually make the full financial obligation to become a homeowner. And that's when we make it official on closing day. As Anya discussed, you're going to sign all the final documentation and get the keys to your new home. But you should wait until you move everything into your new home until you actually get those keys. Like Anya said, don't go scheduling the moving trucks and buying furniture to be delivered until you know that it's happening for sure. Everyone here at the Dream Homes team was very, very happy that you joined us today on our buyer education session. We're definitely going to open up the room for questions if you haven't already put them in the chat. Here are some reviews about all of the amazing team members that we have on our team who've been working hard these past few years to be the realtors of choice. And we all together are the Dream Homes team. Come on, everybody. Thank you guys. So happy to have you all. We're going to open this up here so we can see your beautiful faces. And does anyone have any questions? We'd be happy to. If you just put it in the chat, we can unmute you if you'd like to speak it out loud.
Today.
Yay!
From Miss Emily.
Congratulations,
She's gonna be
Emily.
opening escrow.
Woo!
We're gonna get this party started and close her in 21 days.
Yeah, Emily, you're about to be a homeowner. How does it feel?
I'm super excited. Sorry, I'm also driving.
Nice.
Really, I was picking up food to celebrate. So.
Aw,
Yay! We got the good news right before we came into this meeting. So super excited for Emily and her next chapter of homeownership and financial independence.
yes,
That's
start building that wealth,
amazing.
girlfriend. Anybody else out there have any questions, comments, concerns?
Well, you know where to reach us, everybody.
We'll leave you here with our reviews, just so you can read more about these wonderful agents. And if you don't already have a connection with one of the agents on our team, feel free to contact us however you found out about this meeting. And one of our trusted agents will be happy to reach out to you and schedule a secondary meeting so that we can get you started on your home ownership journey. Have an amazing night, everybody.
Bye, guys.
Bye.